Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
We're back. 0x Research, live, coming to you Friday morning, December 5th. Boccaccio, myself. We're joined by James Kristoff, Noah Thea, Noah Goldberg, Noah.
Is that public?
I won't say some other
yes,
other
I'm
words.
very don't worry.
I think he's pretty well doxed on all accounts that you can find easily online.
Is also
James, Noah, Bach. How are we doing today, gentlemen?
I'm doing great. Thank you for asking. I just had some late lunch, and I'm very excited to talk to two people who are very cynical but also very smart to hear about what they hate and what they don't hate.
What we love.
Yeah.
Yeah, Noah begged to be on today, so glad we could have him. He really wants to yap it up, which is good. I think we need that on this show.
We definitely do. James, Noah, how are you guys feeling? Are you happy?
Mixed feelings. I bet James is happier than me.
I'm always happy.
Very good.
Yeah, I can't complain.
Very, very good. I want to get us started off with something super light. Danny, you can correct me if I'm wrong, as always. General market sentiment seems to be horrendous continuously. Still, I feel like people think that we're going to be in a prolonged bear market. I've actually talked to James intermittently about this, but I try to avoid it because he generally says it's all over. So I guess curious to hear you guys' take on 4-year cycle. Are we just doing dead cat bounces down? Obviously, it's very difficult to predict global macro as well as Bitcoin moves, but curious what you guys think. If you want to share, if you don't want to share, you can also say, I don't know, I can't share.
Yeah, I'm happy to give a crack at it. I mean, my answer won't be satisfying, but I think it's a reasonable view, which is in the summer, things got pretty hot. And I think in general, since the election, crypto has done better than it otherwise probably would have. And then also we had the DATs that pushed up ETH and Sol. And I think we could forget about how much MicroStrategy has been pushing up Bitcoin for the past 2 years, but that's also been in the background. And so when things started to unwind around 1010, the flash crash, I think you saw these premiums to MNAV get crushed, and then an ephemeral source of demand for these underlying assets get crushed. And given that a lot of the revenue in the crypto space is predicated on the pricing of the largest 3 assets, that has negative feedback loops. And so getting here, I don't think any of this was unforeseeable or not the base case. I think it's just a reaction to price being pushed up too much. And so getting the question, where do we go from here? I don't know. But I think I have a good way to think about it, which is you have some view on the probability of a bear market, and you have some view on the probability of a bull market, and you just have to continuously be pricing both of those probabilities when you're looking at different assets in the crypto space. So I think that's harder to do with Bitcoin, ETH, Sol, etc. But something like Aave or a DeFi protocol that you're building out a cash flow model for, I think in the bear market scenario, the next 1 to 2 years of revenue are probably going to be lower than in the bull market scenario. And the bull market scenario is mostly a function of what is the annual growth rate going to be for the next several years. And so the valuations in both scenarios are very different from each other, but the expected value today is somewhere in between those 2 scenarios. And as it gets closer to the bear market scenario, you can feel pretty good stepping into certain names, knowing that yes, we could stay in that market environment, but that's what you're it's already being priced for. I don't think we're in a market environment that things are priced for a prolonged bear market, but they definitely are much closer to pricing that than they were 3 months ago. I think for a lot of DeFi blue chips, the correct price to me is still like probably a bit lower than here. And I'm putting aside like market goes back into bull market, but like just on an expected value basis. But we're much closer to fair pricing than I think we've been for all of this year, maybe other than like in April, and then even like for the past couple of years, it feels like things make a lot more sense than they used to. So kind of a long spiel, but that's kind of where I'm at on markets. No like strong view, just think the framework that I'm using is reasonable enough.
That makes sense. James, any hot takes, or do you generally
No,
agree?
not really. I mean, I generally agree. I mean, look, as you guys know, I candidly just don't own that much crypto anymore. I don't think it's like a super interesting spot in any direction, right? Like I've never taken like short trades in crypto because I think it's generally pretty silly. But there's not a whole lot of stuff that like really excites me right now. Like you don't look at Bitcoin at 90,000 and say, look, I need to rotate out of all my equities and buy it. I think it's kind of just like wait and see mode for something a little bit more interesting to buy. But I don't think it's all over. But I also just don't think the idea of like Bitcoin doubling next year is very realistic. Like it's totally possible to me that maybe we just keep chopping forever until the remaining market participants are just dead, and then maybe we can do something different.
Yeah, this that makes sense. This kind of ties into a very intellectual debate that happened over the past few days, which is this idea of like valuing, let's say Bitcoin or Ethereum versus like I don't know Solana, etc. How do you value Bitcoin and ETH? Because to me, functionally, they're very similar assets. Both don't make much revenue off of the network.
I was actually thinking about this morning in the shower where I do my best thinking. Are you continuing? Sorry, I thought you were done already.
No, I'm done. Please speak of your shower.
Like so me and Danny were talking about this. We were just
in the
pinging each
shower
other back and forth. Yes, in the shower. A few weeks ago.
Together.
Yes, together. How like my general view is like all this stuff by and large trades much more like commodity super cycles, boom and busts, than it does any sort of like beta hold asset. And I think like that's kind of why everyone is always so pissed off in the space, is even when asset prices are at all-time highs, like the actual like basis of people is not good, because this is not an asset class that you can kind of just like average into in DCA like someone would into SPY or something, and like at the end of the day have a decent cost basis and be happy about like where markets are. They're always gonna be pissed off because retail participants are always buying at the absolute tops and selling the bottoms in the asset class. So like when you think about valuation, like I don't know, I think it's probably impossible for someone to say Bitcoin is actually, you can value it on anything. But if you think about it in terms of like commodity super cycles, and like you kind of crudely compare it to something like oil or something like that, I think to me at least that makes a little bit more sense. And I think it does explain people's behaviors and general views and how upset they are compared to where price actually is. Like people really shouldn't be that pissed off with Bitcoin at this level, but then you realize the vast majority of people bought it way higher than they should have.
One question I have here is like when you say oil is a very useful asset. So like, can you compare, or like commodities, super cycle, whatever?
Yeah,
like there's also copper and stuff included in that, and that is like going up a lot because of usage in RAM and CPUs.
It's not necessarily a valuation. I'm just more comping it to the fact that like
the price
there's no such thing as a long-term commodity investor, right? You can't just, besides gold, right? Like to put X that, like there's no one who just buys natural gas or buys oil forever and holds it for 20 years. It's just like that's just not how that asset class works.
Okay. That makes sense. So you're not a big we should value these like cities guy.
I think it depends. Like if you're talking about something like if you're talking about like a credit product on chain that's like lending out money and buying back a token with revenues, then yeah, totally that makes sense. But like I don't find the conversations of like how do you value Bitcoin that interesting, to be honest, because I don't really know what it gets you. Like there's no action even if you do. Yeah, it just doesn't do anything for you.
Okay. One follow-up, and I think this is also related to something that I wanted to ask you is, do you think that if there are more traditionally valuable businesses, that's probably not the right way to put that in, but let's say I don't know, I don't want to say HumidiFi. Let's say like a syrup or like a maple, which has a credit business, which is something that exists in real life. Do you think that pulls investors further into it because it's like, well, okay, like this is how you should value this thing, therefore it should be valued at X, Y, Z? Or is that not the right way of thinking about it? And then also general thoughts on this would be appreciated.
I mean, I think anything that has cash flows is easier to model than things that don't have cash flow, or like is the band of whatever you consider fair value is more narrow. And I would say like I agree with James. Like this isn't a particularly like trying to value BTC ETH SOL, like the amount of time and effort that goes into like debating these topics is kind of a waste just because there is no like true valuation. So like we can like say what's the probability that it's priced like this type of asset or this type of asset, but it's all kind of just finger in the air. So I don't know, I'll just add that in. But the other thing I'll say is like my kind of view on the way ETH and BTC and some of these other assets are priced is mostly a function of like how much capital is there that is looking for a home within crypto. And like that explains most of it. Like when you think about how people like allocate their capital on a directional basis within crypto, like BTC, ETH, SOL, that's beta asset. I want an alpha asset. I think like a lot of people think like that. And so if you have a bunch of alpha assets that are really attractive, all of a sudden that starts to eat away at the beta asset. It's like a kind of like within your portfolio composition. So like my view for quite a while, and it's not to say it's played out, but like I still have confidence in it, is that like if you had $100 billion worth of like cash flowing assets on chain today that were priced appropriately, ETH would get hammered just because like there's a lot of capital that wants allocations to things that make sense. ETH, like it doesn't not make sense, but only because there's no fair price, or like maybe there is, but it's hard to come across. So you can just allocate to it blindly and say like, this is my beta asset. So I just think like, and the same thing with L2s, which might be, and not to get into like a big rant, but I think like people ask the question, like, how do you value an L2? And like, that's a question that you can ask when like some of these L2s are trading at 10 billion, but all of a sudden when they trade like at 500 million, you're like, oh, well, sequencer fees, like it's a high multiple, but like now we're starting to talk about things in terms of multiples. So I think like the argument for like, how do you price ETH, SOL, like things that actually have like cash flows that they could potentially produce. It's hard when they're so far away from those like cash flow levels to like try to price it. And then as they get close to those levels, you start to be able to justify it. And I think like that's like quite negative for these assets, just because like as they go down in price, all of a sudden like you become more conditioned to agree like, oh, maybe the fair value should be lower if they're priced on cash flows. So I don't know, that's like a bunch of different ideas with regards to the current like valuation debates happening.
Yeah, and one little thing I'd add on that, I think Noah made a really good point. It's like for BTC, ETH, SOL, their valuation is like I don't know how to quantify it, but it's almost entirely related to how you would think institutional allocators increase their beta crypto exposure from X to X times 1.1, right? And that drives the exact valuation. There's nothing else there in terms of like fees or revenue, I think.
I think that makes sense. Well, I guess, Daniel, unless you want to jump into HumidiFi, I have one more thing I can bring up on this.
Yeah.
We were just thinking about this like internally because some of these like multiples for some of these sectors are so shit in crypto. Do you guys see that they improve over time, or do you think that some of these are just perpetually uninvestable? The one I'm thinking of, like liquid staking stuff, is, I mean, they don't have a great way of expanding their business, and their core business is really shit. It's like clipping a BIP on mint and burn and stuff. So curious if you guys have any thoughts on like how multiples might change going into the future. I'm just like, at this point, I'm more so asking, okay, I want to buy some stuff. How should I think about this?
If you're asking me, do I think the price of Lido will continue to go down while the market cap goes up? The answer to that, as you can expect, is yes.
Very good.
Yeah, a couple things. One, like multiples have been too high for too long. Part of that is like there was an assumption being made on growth that didn't materialize in the way that it was being underwritten. Like if I'm trying to like say everything's fundamentally oriented, the other answer is just like people didn't care about fundamentals and so we're willing to price things like higher than they should have been. But now that multiples are coming down, you start to like ask real questions. So like whereas, you know, a year ago someone might have been willing to buy a DEX at like 20 times sales because like the average multiple for DEXs is like 50 times sales. Like when all the DEX multiples are coming down, and I'm starting to look at like TradFi comps and say like, okay, this is what like real business multiples are, then it's just a kind of painful reality check to like find out that the majority of like even early stage companies, because like that's the argument that someone could say against this, but like even early stage companies, like a 20 times sales multiple is like not unheard of, but like pretty hard to achieve unless you're like really early in the revenue story and people have a lot of confidence on the growth. So that's like one piece. And then the second on like quality of revenue and like growth prospects. So like what is the correct multiple? I think like my view just broadly within this industry is that people haven't been focused on like commercialization or a lot of people like within the token complex. Like Lido is a great example because it seems like things are changing there. Like there's this like almost like communism, socialism mindset, whatever the like the right term is there, where like people are like kumbaya, I don't need to make money, like our business will just work. And like I think anybody coming in could say like that was a stupid idea to have. But you know, when you finally put pressure on people and like they start to have their token go down because they're not making money, and so like there's no reason to invest in the token, then they start like having to figure out like what do I do to make money. And so like it's just to say, I think like for the past few years there's been no real discipline within the token market complex. Whereas now that like prices are coming down, you're starting to see discipline. So I just think like a lot of products that or like businesses that created single product lines that like really weren't commercially scalable are gonna have to realize like I either have to like vertically expand massively or I have to like horizontally expand into a DeFi like suite. So as far as like what are the multiples that you're willing to pay for this stuff, I think it's like heavily a function of what is the ambition of the team. Because like to your point, liquid staking is not a big revenue opportunity, even if you win the entire market, even if you win like every marginal like L1 that launches, it's just never going to be enough to justify like more than a couple billion in like the true upside case. And like that's reasonable, but if you're investing at like 500 million, then you need the case for like more than that, and that's going to require them to go into other business lines. So that's like my very long spiel on like what has to happen, where valuation is. I think like valuation isn't cheap unless you believe these teams or like the teams that you're investing in are like doing what's necessary to grow revenue sufficiently.
Yeah, it does kind of suck though, because when I first got into crypto, you could have just looked at a valuation and been like, yeah, this seems cheap, without like doing any multiples, and you would have made money on it.
Yeah, I think the big factor here that Noah calls out is like path dependency was probably pretty ruinous for a lot of teams, because so many of them got lulled into this like false sense of security that like the 2021 times mean that you can just have, you know, a 200 or 300 or 1,000 multiple forever off of just like pure exuberance or belief or something like that. And as those compress and prices come down, it's like kind of like a sucker punch of, oh, actually, like maybe we do need to think about how we make money. And I think to Noah's point, like we're seeing that pretty generally like across the board. I think, you know, even the ETH folks were pretty down in the doldrums. Like at the beginning of this year, prior to like Tom Lee sort of bringing back some exuberance, but still the discussion there became very split between like, okay, does the chain need to make some money, or can we? You kind of have the other side of the camp that's like, no, actually, this should be worth 88 trillion because of like it's a nation state or something like that.
The nation state stuff I did like, to be fair, because I thought that one was like a little spooky enough that you could actually get behind it. I think a lot of this is just spillover from the fact that early Ethereum people are academics or like FOSS people, such that monetization isn't a massive thing, and then they're still kind of worrying about that. I also don't know if the implication behind Noah's communism comment was Ethereum. I'm presuming it is because of past experience. But I guess, Danny, I don't have enough context on HumidiFi to introduce the topic. Would you like to share?
Yeah, let's talk about HumidiFi. It's been a big topic in our chat on CT and generally, kind of within the space right now. But I guess maybe background on HumidiFi and that maybe market on Sol is that prop AMMs have become sort of the dominant means of trading activity on Solana now. They're basically the dominant sort of market makers for most of the larger, more liquid tokens on the chain. And I think an interesting stat is that like Sol USD, for example, they're processing more volume than Binance as of like this past month. So it's pretty significant, like what they're doing. But HumidiFi, the leading prop AMM today, did or is doing. They're still working through this now, which is maybe part of this discussion. Working through an ICO of the WET token. And I guess there's lots of criticisms from the community generally around like what the token is, what it achieves in relation to the protocol, like what the purpose is. But they did a pre-sale and then like a public sale. I think there's a lot of things we can talk about, but maybe the one thing that happened in the past day or two is that the public sale portion of the for the WET token got botted by 4 addresses, which I think people are pointing as like this should have been obvious type of outcome of there was like, you know, no restrictions on addresses or like who could participate or KYC or these things with a $1,000, I think max kind of allocation in that round. And so naturally, you know, some, you know, not that sophisticated, but anyone willing enough to kind of write up the script in the bot to go ahead and do it, just snipe the entire sale. And now they're having to rethink that portion of it. But I think there's a lot of things we could talk about. We could talk about tokenomics. We could talk about like the utility of the token as stated in their like kind of initial docs is that holding some amount of it or staking some amount of it gives you a fee discount for trading with, you know, via HumidiFi. Noah and James were fairly heated in the Telegram, so I'd love to just kind of jump into wherever you guys want to chat about it because I think there's lots of different angles we could take.
Yeah, I guess I'll start. And I'll start with like kind of more of the objective take, and then we can get into like my personal opinions. But I think like right now where token markets are at is that like they've been abused, like public token holders for years, call it since like late 2021. I think people finally started to take note of this. Obviously the, you know, ICO bubble in 2017 was pretty painful for a lot of people. But the point is like this game has been going on for such a long amount of time that like people have at least realized like what parts of the game don't work or need to be changed. And one of them is like, what is the value of a token? Like if the token is valueless, we'll price it one way, and if the token isn't valueless, we'll price it a different way. And like we need to know what that is, and to know like what we're getting ourselves into. And so I think that's somewhat of a new dynamic that teams have had to take note of. I think like during the like previous administration, there were a lot of things that you just couldn't say because you were fearful of regulators or like malicious actions on the legal and regulatory side. It's not to say that's changed today. Like I don't think that like people should be going on podcasts and like advertising on registered securities, but I do think that like the general idea around what you need to communicate to the market has changed, and that like it's not a function of saying like this is like a token that's going to accrue value from the revenue from my protocol. But I do think you need to say when that's not the case. So like if you're going to launch a token that like is essentially like a meme coin, not to say that's what like HumidiFi is, I think you need to like be very transparent around it. And like I'll use Pump as an example, not to throw too much shade there, but like there was this like kind of idea that there was going to be a 25% buyback of revenue that was never publicized anywhere, partially I think because of like legal or regulatory constraints. But like everybody knew that was the case, and that's because people were trying, or like that needed to be communicated to the market so that the market was willing to price Pump at like the multiple billions of dollars that like the equity value would be worth. And so like lo and behold, down the line, that figure changed to 100% of revenue. And like, great, that's great for investors. They're maybe better off than they would have been with 25% buyback. But the point is, it's like you had no idea what you were potentially stepping into. And so like, I just think in general, we need to get better about disclosures so that investors can know what they're holding. And so like, I think with HumidiFi, the like going back to like more of the opinion side as opposed to the objective side, like I don't want to call it distasteful per se, but I think that like it's fair that people are assuming what's going on here, which is that like this is a pseudo meme coin. Like HumidiFi is doing really well. It's like a great product. Team behind it's super competent. But like they're not selling their equity. They don't want to like change their cap structure. This is my assumptions. But like they want the market, like while the market recognizes that like HumidiFi has massive market share, like they would love to get like a token exit for this business line because it's probably a much higher exit valuation than like the actual value of the cash flows from HumidiFi. So that's like kind of why I have a negative feeling towards HumidiFi, is just because like I think a lot of people are asking like what's the value of the token, and like they're purposely not answering the question, and we can like argue why that might be, but I think like it's kind of this game of like purposely obfuscating what the value of the token is so that people potentially assume that it's the like cash flow oriented token as opposed to like the meme coin token. And obviously that's different than like what's been written on the website as far as the tokenomics, but that's just kind of like my view of the current situation.
I will say one thing is, no, I agree with you completely, but like the pump situation, for example, I think the market still just also doesn't like if there is any form of I don't know if you guys remember this, but one day Pump bought not 100%, or like they usually do like 98% to 104%, based on their like fees dashboard. And one day they bought less than that, and it just insta dumped 10%. Which like, if you're not very clear with people about like what your value accrual mechanism is, or like why your token is useful, etc., then the market just generally doesn't. And also, Pump has been on like clearly there's some issue in the way that these things are communicated, since it's not been performing very well. One thing is, I don't really understand why HumidiFi would launch a token. It doesn't
Really?
Well, I mean,
I can give you a few reasons.
No, like, yeah, you can make money off of it, but I don't know, isn't it like a very complex legal thing as well at that point? Like I don't know, it doesn't make
it's not more than like $1 million or $2 of legal fees to like get this all set up, and they're, if I had to guess, like not going to like say anything remotely close to like this is security or like this represents ownership. So like I don't think there's too much risk that they're taking. And like just for some like basic math, and this is I'm not like a quant, so my numbers could be off for crypto, but I have like some directional sense for what it is in like the public markets. But like return on trading capital for a prop trading firm is anywhere from like 30 to 70% in like good years, with like some risk to the downside. It's like highly levered activity, but like that's like generally what you could expect. Like Flow Traders and Virtue, those are public companies, and like they have their results public. And so I'm like on the Blockworks dashboard, just quickly pulled it up, and like HumidiFi has $10 million of trading capital, like given it's growing, but like on $10 million of trading capital, let's say optimistically, they're able to continuously do, and also I think they could be doing higher than 70%, just given that this is a new trading strategy. But like the point is, like, if this is a profitable trading strategy, there are a dozen other firms that are going to figure it out pretty quickly. This, like prop AMM space is already like somewhat competitive, and so like the margins aren't going to stay above 70% if they are today. So like 70% on 10 million of capital is 7 million of revenue. Probably have a fair amount of infrastructure that like they're spending to keep this revenue being produced. So like, what's the multiple that your business is worth on like that revenue base on like a somewhat like niche strategy that can't grow too much, just given that they're already such a large percentage of Solana? Like it's like maybe a 5 times revenue multiple, like in a very aggressive valuation. So it's all to say like this business line is worth less than $50 million, and this token's going to trade probably above $50 million, not financial advice. So like there's money to be made, and it's 90% owned by the team, and the 10% that's not owned by the team, a decent amount of that is going to be like sold out. So like it is essentially just like selling off a business line into like the public markets, but without any of like the securities aspects. And so like they'll still make the revenue. So I don't know, that's like my cynical view of the situation.
James, what do you think?
I don't really honestly have anything super strong opinion on it either way. I'm probably going to buy it at TGE just because cynically, I think enough other market participants will incorrectly assume that this is just buying equity in the highly profitable market maker, which it's obviously not. Right? Like if this type of thing, I always like to index of like if a project like this were to launch in much more exuberant times, like what the valuation would be, right? Like this probably could have been $1 billion token at some point in the past. Is it something I would hold long term? Definitely not. For every reason Noah said, it's not tied to any revenue that they're making or anything like that. I can't really don't have super strong feelings on it.
Yeah, I think I agree with both of you here. Like, I think I've seen some comments that are basically like 2021 looking token, which I think, to Noah's points about how like the token market has kind of evolved, especially maybe this past year, maybe 6 to 8 months even. Like, just the market itself is asking a lot more. And you mentioned Pump as the example, and I think Pump was basically their hand was forced to do 100% buybacks because the market was not willing to accept the valuation at even the rumored 25% buyback. I think plenty of people still out there thinking along the lines of, oh, they have 2 billion in cash or what have you, and like the token has no claim to it, XYZ. And the lack of sort of like clear comms on that, or like clear kind of forward strategy of how that benefits the token holders, is kind of, it sort of leaves it in this limbo where the market wants more and they're like not willing to give it. And so they're sort of, I think within the market, they're getting punished for that. And so it's sort of this correcting thing. And I think that's essentially what we're seeing with HumidiFi as well. Is I agree with James. Anytime you're the new token, doesn't matter if it's like a great thing or a bad thing necessarily in terms of the structure of the design, but we're a lot of people are here to gamble, so people will gamble on it for a few days. Maybe that's a source of revenue for the team potentially, if they're not willing to be more clear about the intentions with it, or if it gives you a claim to the revenues that the operation is actually providing, then the market, I think, will inevitably hammer them for that unless they provide more context or are willing to offer up more. But in the long term, if they don't, it'll get hurt for it.
Yeah, I think that's kind of why I find this generally just not super interesting. It's just more of the same. Like if we want to keep playing these like very small extractive games for like these sums of money with ambiguous tokens that don't really do anything, like that's fine and it can be fun for a few weeks. But it like just fundamentally doesn't drive the space forward at all. And it's just not a serious way of raising capital, right? That's my general view.
Well, they did the ICO already, right?
No, they're refunding everyone.
They need to. They're reworking it. Yeah. So I guess the big issue now is that they did the pre-sale and there was limited to like certain wallets because it was based on Jupe stake criteria and things of that nature.
Oh.
And you got allocation based on Jupe stake, but then the actual public sale phase, did not have this limitation. So you could have spun up a bot to snipe 1,000 USDC across 100 wallets and get filled, and that's exactly what happened. So they're rethinking what the public sale looks like.
I will say one thing. These guys are also temporal. What's the correct pronunciation?
Temporal.
Okay. Temporal. HumidiFi is them. We interviewed Ben from, remind me the name?
Harmonic.
And then we also have Project Zero, which is McBrennan, which is also temporal. So these guys are across essentially everything relevant that is being built right now in Solana, which is quite impressive. I will say, like, no matter what you think, it is quite a few products that is coming out of this like one. It's good. Again, I don't know what you would call it, a research group. Danny, what would you call this system? The new paradigm.
Yeah, I mean, you kind of have. I guess it's sort of paradigm-like in the sense that you have sort of like this variety of project protocol teams, and are sort of like all affiliated under kind of like this research brand. That's probably the way I'd think of it.
Yeah, like if you told me you can buy equity in the umbrella that owns all this stuff, yeah, I'd probably do it. That would be cool.
How
that's
about
never going to be offers?
How about you can buy potentially associated meme coin or equity No clear. This is another case where I was talking to Ryan Connor about this. And I was like, "What are your thoughts on MetaDAO?" And I was like, "Anything bad that happens in crypto is an advertisement for MetaDAO." So it is going to be continuously relevant over the next year. So.
This is true. I know Noah makes a tweet every single time there's a bad token launcher or something like that.
Yeah, free advertising. Yes, and I don't want to continuously shill MetaDAO, given that we're an investor. But yeah, I think highly of it. The thing that I will bring up in tandem with that is Dougie DeLuca from Figma Capital put out like a good article on Twitter the other day, where it basically like talked about hype and MetaDAO, what they have in common, like why they worked. And I think like he's right at a high level, but I think it like kind of touches on this like broader topic at hand, which is like in an ambiguous market, like eventually you breed distrust, and eventually like the easiest way to kind of communicate why someone should trust you to the market is to take like the most extreme like version of trust that you can give. So like in the case of Hyperliquid, they never raised from VCs and they put 100% of their revenue on their buyback. With MetaDAO, you have like a incredibly token holder friendly governance and legal structure. And like I think that like these in the current reality where there isn't like regulatory clarity around like tokenized equities, assuming that like eventually happens in the future, these are kind of the like stopgap measures required to convince the market that they should trust you. Just because I think like whereas like a few years ago people were willing to kind of trust people to eventually figure things out on the token, that trust has been removed from the market. And so you're almost like, if you're launching a token, there's like not necessarily a discount per se, but like there is some risk premium that like the market is very clearly pricing in on the fact that like unless you say something very explicitly and like we can hold you to it legally, like we need to be compensated for that.
Yeah, I think this is, I hate that I have to do this because I'm an investor in this token, but I think this is probably a bit of Hyperliquid's like well, because I think everybody beforehand was given the chance to say, well, we're going to figure it out. And then the SEC was the boogeyman for so long. And then like once you have one project who is very explicit about how the entire system works, everybody else has to kind of be forced to do it as well, or else you get a perpetual discount. I don't know. That's Danny. That's my thought. Do you have anything else you want to add?
No, I think that captures it. I think we're sort of seeing some of these forcing functions now that you have enough people asking for more, whatever you want to call it, token holder rights or more clarity, or explain to us how the token has value. It's become a much larger part of the conversation, and especially now that the market is not going up in a straight line. Obviously, people maybe ask fewer of those questions when things are up for a year and a half, 2 years straight. But yeah, it becomes much more important, when you're considering whether something actually goes to literally zero.
Yeah. To be fair, I think we had this conversation beforehand as well, where it was like, what's the utility of the token? But it was like, you could get away by saying, oh, you can stake it. And then you can also vote on governance. And then maybe there's a burn. Versus like now, even now, objectively, like buying back the token is very good. But
to be fair, some semblance of this will always exist in capital markets broadly. Like you see it in equities as well. When there are tough times, people go to defensives and they move out of the higher volatile stuff. And then when kind of exuberance re-enters the market, they ask, maybe retail asks for your questions and they pick your favorite ticker. But those are, you have sort of those volatility cycles, and anytime when the kind of tide comes back in, people start asking those underlying questions again. So
yeah,
it might ebb and flow, but I think generally we are seeing the kind of direction has been trending more in this direction.
Okay, I wanted to add one more thing, but I realized these guys are probably going to start getting intellectually bored if I keep speaking. So next question is prediction markets.
Before we get to prediction markets, I want to do a quick shout out to our sponsor for today's stream, Uniswap. Thanks to Uniswap, the Uniswap trading API solves the problem of adding crypto to your products without the hassle of needing deep crypto expertise, ongoing maintenance, or liquidity aggregation. The trading API provides access to the Uniswap protocol, which has processed 3.3 trillion in all-time volume, handled over 465 million swaps from more than 25 million addresses, all with zero security breaches. Developed by Uniswap Labs, the US-based team behind one of the most used DeFi apps, access some of the deepest liquidity in crypto, combining both on-chain and off-chain sources for optimal pricing. The same liquidity that powers billions in swaps, now available via a singular API. Thank you to Uniswap for sponsoring today's stream. Let's get back to it, gentlemen. Go ahead, Bach.
Prediction markets. Okay, so I've read a lot about prediction markets over the past 2 weeks. This has been very interesting to me because I thought I'm missing something. There's something way deeper in this. And then I saw Tulip King, my goat, post that as a politician, you can give 20 people $5,000 if you have a 5 or like a 2% chance. And then if that goes up, they end up making exuberant amounts of money. So technically you can raise, like you can put in 20 people's hands a lot of money potentially and make them really want to get you as much political power as possible, which to me implies that Tulip King's idea is we're going to give 20 people money so that they are incentivized to kill political opponents. But I think what he meant was so they'll go out and do work for you. I don't really see prediction markets as this way. I feel like they're kind of reg arb for gambling by using crypto money. But curious what you guys think, especially given that is it today? Kalshi raised
2 days ago. Yeah,
2 days ago. Kalshi raised at $11 billion, $1 billion at $11 billion. I don't really know how a team spends $1 billion, especially an on-chain prediction markets team, which I feel like your burn surely can't be like it covers you for the next 40 years, right? Like that's not a no.
Yeah, I was pretty positive and nice this podcast. So I'll use the last couple minutes or so to open up as my personal self. Like that the politician thing you were talking about. I mean, look, I don't really know why we shouldn't even treat it seriously. Like people in crypto still talking about these types of ideas are just so freaking detached from reality that I don't know how to respond to kind of a suggestion so asinine. Imagine just trying to explain that to a reasonable person. It's just so obviously fucking idiotic. I don't know if anyone else disagrees with me on that one. Tulip King, I apologize, but I don't think that's the future of elections.
That's your hot take, is that that's not the future of elections? Be a little bit.
No.
I brought you on here so that you can be critical.
Sure.
And all you've said so far is
so okay, I'll be serious. So I actually probably like 6 months ago was a little nerd sniped on prediction markets. I thought they were actually pretty interesting. And where I particularly actually thought there'd be a use case was like within the TradFi, particularly the macro space, where you might have a fund or a manager that wants to express a very specific view, and some they force themselves to be expressed through oil or other types of macro instruments that are not that elegant. And I thought that would be a real route. And then I talked to more people, and they basically told me that they weren't interested in that whatsoever. Like this is just pure anecdotal, but I just haven't seen any of that demand. And like just more personally and socially, like gambling really rubs me the wrong way. I think it's kind of gross and icky and not good for people. So I just don't love the kind of entire rewrite of prediction markets over the last like 6 months of how these used to be the ultimate arbiters of truth. And then you can look at any dashboard and people are just betting on sports, which is fine. Like if you want to waste your money gambling on sports, that's fine. But I don't think these businesses are worth $10 billion.
Is it the arbiter of truth? I thought, like, I mean, I guess it technically is, but did you guys see that thing about how this insider Google employee ended up making like 400 grand just because he bet on like the highest search? Well, yeah, I mean, it's the arbiter of truth through insider trading, which I guess it is democratizing insider trading, or like views into insider trading, which is pretty good. To be fair, that's not a bad use case.
I mean, look, we're just expanding the gambling pool, right? And like if that's something you're interested in and you think that has a huge TAM and you can expand multiples, that's fine. I don't see it.
I don't know. I definitely don't know about 11 billion. I mean, they're so. The thing is, okay. No, maybe you speak first, and I'll give my thoughts because I don't really have anything meaningful to say right now.
Yeah, I'm not going to talk about valuation. I feel like, I don't know, feels like kind of objective whether that was rich or cheap on a forward basis. But yeah, I mean, I think the truth tends to be within the middle of two opposing views, and the opposing views on prediction markets are like pretty far on the extremes. And so like I think on one hand you have people that are like super negative on them because it's like essentially just facilitating gambling and like masquerading it as like some like change in financial markets. And on the other hand, like these markets allow people to communicate like views very directly that they previously didn't have the ability to speculate on. And I think both of those things are true simultaneously. And that all being said, like I think people in crypto tend to have this issue, and it's definitely present here, where like we talk about like what the future looks like, assuming success occurs, without acknowledging that like the go-to-market strategy in order to get success is like predicated on like I need to get these like gambling addicts to like start making my product money so then I can scale it to these like more like philosophically valuable things for society, and you end up just kind of for the most part like just doing the former activity and never getting to that latter activity. And that's definitely like where I think we are right now, where like 90+% of all prediction market activity, like putting aside the fact that we're not in an election, is just sports gambling. And like Kalshi is on Instagram, like advertising how you can gamble on sports in all 50 states. So it's just like very clearly regulatory arbitrage. But simultaneously, like you have a election, like the stuff is going to be used for something that previously people didn't have exposure to. So I don't know. I have like a positive view on prediction markets long term, but like I think that gambling addiction in the US is like increasing rapidly. And I think that like we do not have advertising laws in the same way that like every other developed country that enabled gambling earlier on has. And that's like quite negative until that changes. So a lot to, to say there, but that's all to say. Like I definitely think like the current product offering is like heavily a function of enabling gambling from those that didn't already have access to it, as opposed to anything else.
And I guess one other thing I would add is like, I mean, tell me if you guys disagree. Like one of the things that I feel like has been propagated a lot about prediction markets is news in general, like how it can improve the news and improve the dissemination of information. And like not to make too much of a social or like political comment, but like what I think society could use a lot is like true independent journalism in the news space, which like is completely detached from any level of financialization, right? Like people like award-winning journalists that break like real stories are not doing it for like financial outcomes. So I think like when people talk about like the news, like if you think of like the CNN Kalshi integration, like what is it going to be? Is it going to be like a Kalshi bet so you can watch like fucking Steve Kornacki every election like predict how many electoral votes are going to be? Like it's not beneficial in any sense that it's going to increase the amount of information that's spread. It just allows you to play like relatively zero-sum games where you're changing the market instead of sports to politics.
Yeah, I agree with that. One thing I will say is we had this. I don't think you guys had this conversation, but I was seeing it a lot. Was about like meme coins when they first launched and about how it was. We know what meme coins are, but it was pitched as something very different back then, which was this false idea that it's sticking it to the VCs and actually you can get your news faster because on Pump Fund they create this token almost immediately after finding out. And like lo and behold, we find out 8 months later that it was actually just like a bunch of 16-year-olds who were either on one side botting people and making millions of dollars, or on the other side with $80 in their phantom trying to make money and then making TikToks.
Well, I mean, I personally invested in SPX 6900 as part of the community. So I don't know if you guys did as well, but that's why I did it.
No, but like every 6 months we get the same thing re-wrapped up. I mean, I guess Kalshi and prediction and Polymarket is a bit more legitimate than meme coins are, but like who is to say? Because
I mean, dude, it's literally the
some
fell
meme
for it
coins have
again. It's the fell for it again of meme, and like eventually market participants need to get smarter. Like they need to increase their IQ and stop stepping on the rake and hitting themselves in the face over and over and over again.
okay.
I'm not sure that's
Yeah.
an outcome though. Like if I'm gonna play the other side, why does that happen? Because like even just buying lottery tickets, that's like a year over year
Yeah,
up and to the
no,
right, and
fine,
sports betting, like this.
but
You can
the
be like,
sports betting
I
is
think you
not
can be
investing.
upset like morally or ethically or something, but I'm not surprised to see that like they found a way to, maybe it's a better product than sports books today, and so you're probably going to see them in the news continually in years to come.
So
Because I don't think
to
people
say
are going to
nothing,
stop gambling. They love to gamble.
agreed, but to say nothing about the morals of it, I think it's probably bad long term for someone like Robinhood's business to allow their users to simultaneously like sell equities within a brokerage account and bet on like the intergame under for like a AAA fucking like AAU basketball team. You know
I
what I
think
mean?
that's a
Like
more
that is,
interesting point. Like,
yeah.
are they going to lose customer, like some clip on customer balance over time because instead of buying SPY, they're aping into the Rams game on every Friday or something, or Sunday.
I mean,
Yeah, like just on this point, like why has Robinhood been successful? Amongst many other reasons, it's because the gambling is on a positive expected value asset, that is public equities. Like equities drag up into the right at the risk-free rate plus like 4 to 6%, depending on what your risk premium is over most time horizons. And so like regardless of whether people are like net losers from their individual trades, like the direction of their accounts, assuming they're like staying long, is up and to the right. And so if you like combine that and like the ability to lose money very quickly, like I know they have options, but like just on spot equities, it's very difficult. Whereas if you give someone a button that like can double their net worth or make it zero, like most people won't click it, but some will. And half the time those people are never your customers again. So like any activity that's zero sum, you just have massive attrition of users as they go out of business. And that gets me to my point, like on lottery tickets and other like speculative activities. I think what you probably notice looking into the data is that like they're heavily skewed. Like it's like a power law dynamic where like the people that are buying lottery tickets every day are the people that count for the majority of the revenue. And like you start going into the demographic of those people, and like what you kind of come across is the fact that like there are people that are addicted to gambling that like make a certain amount of money and are able to save a certain percent of that isn't going to their life costs, and they're just hemorrhaging all of that into gambling. And so like it's not like the activity on gambling is not positive sum, it's zero sum, but because they're willing to continuously lose money in the hopes of eventually making it big from like their salary, these activities can continue to grow. But like net, it's a pretty negative societal outcome to have like these like quote unquote like wage cucks that are like putting a portion of their wages into these like gambling activities in order to like hopefully make it up to like the upper class level.
Yeah,
To the-
and to say, oh, sorry, go ahead, Danny.
Yeah, I was just going to say, to that point, you could make the argument, like if you're a business like Robinhood or any other, maybe if you're some other broker that's going to then add in prediction markets, for example, or gambling, you could potentially then make the argument that like you're getting net new customers who, maybe you're not really going to lose value from people who are just clipping into SPY from their salary, and you're going to onboard net new users who maybe don't care about stocks but will clip their salary into the prediction market every week and bump your revenues.
I think with that though, like people and VCs in particular here, and this plays into like the valuation thing of it. Like, I think that they're probably far overestimating the TAM and the expansion of user bases that they can get. Like, I don't know what the number is, and I don't really care that much.
Wait,
But
this for
if you
prediction
just
markets?
for prediction markets, gambling, and everything, like if you say today the value is X of activity, quantify that as a variable. Do I think it's going to be 1,000x in 2 years? No, I absolutely don't. I mean, if someone has data to prove that wrong and thinks we're going to become as a society 1,000 times more likely to bet on prediction markets, then maybe that justifies valuing Kalshi at $11 billion. But like I think it's probably like maybe if you say it's like a 5x, then maybe that's like a super ambitious thing over a couple of years. I just don't think that this is something that like average retail people are really going to be diving into. Again, maybe I'm wrong.
I don't know if the front end is suitable for it, to be honest with you, for average retail people to be able to dive into it. Like, I don't like this idea of making the general consumer seem so stupid that they only need that you can't give them more than 3 to 4 buttons, or else they get confused.
People also enjoy betting on sports because it's fun, right? Because
Yeah.
they can go watch sports and do it socially. And that's, it shouldn't be surprising to people that these prediction market sites, like the vast majority of their volume is on sports. It's not fun to vote on like the attorney general race of the state of Georgia. You know what I mean? That's not a conducive thing to do socially.
Yeah, I think that's fair. Maybe I guess some of the data points that I'm looking at is like if I look at Flutter Entertainment is owner of FanDuel and many other betting sites, and then like DraftKings, for example, are public companies. Like their aggregate market cap is like 50 billion as the major sort of like sports betting locations today. So I don't know, for Kalshi and Polymarket to like be looking at $10+ billion raises and 80-90% of the volume and the revenues are on sports activity today. I mean, to Noah's point earlier, it's like it maybe doesn't take that much of a look to question whether these raises are a bit rich, and you have to be asking like, where is really a lot of this growth going to come for in the next 5-10 years? You have to like really believe that, like you're saying, James, that people are going to just start betting on political races like every day.
Yes, and just on that topic, just to steel man what the argument is to like do the kind of $9 to $11 billion range raise for like Polymarket and Kalshi. Like, yes, you have like the kind of sports gambling market today, and those are your comps, and then you have, like, to James' point, like how large is the aggregate like gambling market growing? It's probably linear and like, maybe low teens percent, probably lower, but optimistically somewhere around there. And so like you need to believe that Kalshi and Polymarket have enough of a differentiation to like materially penetrate the existing gambling market, and then you need to believe that they're also able to go into like the traditional financial markets in some sense and like become a proper exchange for other activities. And like if you get both those things, I think like you can see like a $50 billion outcome optimistically. I think like in a true like tail case, you could maybe be talking about like a Robinhood or Coinbase type outcome. So like closer to like the $75 billion to $100 billion value. But those are kind of like what your upsides are. And so like if you're looking at like a 5x to like a 10x in like the upside case, like that, I think you need to have like pretty high confidence in that to like invest at the current valuation. Just because otherwise I don't think the hurdle rate really makes sense. And like I can kind of see why you'd want the exposure as a VC fund that doesn't have like an existing prediction market exposure, but like you're definitely kind of signing up for below market returns under like most probability scenarios. So I don't know. I don't think like a traditional growth fund could look at this and like make the math work all that easily here. I think that it's kind of like, do I want exposure to this thing? Is this the price that I have access to? Yes or no? Like, fine, I'll do it. So I don't know. I think there's like a valuation case where it makes sense, but like all in expected value wise doesn't make sense to me too much.
Fair. I think great points all around. James, any last comments or thoughts on prediction markets? Otherwise, I think we can wrap it up now that Bach has returned for the closeout.
This was fun. I appreciate you guys having me on as always.
I appreciate you coming.
Yeah, thanks for having me on.
Awesome. Noah, James, always a pleasure. Next time you really are eager to chat about something, just ping us and put urgent in the Telegram, the 0x Research Telegram chat. And, assuming there was not another guest lined up, we'll likely oblige. And James is gone.
Sounds good. Looking forward to the next time we chat.
All right. Bye, guys.
Awesome. Good chat.
Did you say bye to the listeners, Danny, or not?
Listeners, we do love you. You should also check out the Xerox Research Telegram chat. It's a lot of fun in there. Sometimes. I don't know.
Sometimes it's
Ian
really
and River found out some new technologies to put a lot of Salchicha Dog stickers into the chat. But yeah, it's usually a good time. We talk about all things crypto in there. So definitely hop in. Cool. Peace out, everyone. Have a great weekend. We will see you next time.